Welcome to this episode number 107 of your next trade, called today multiple deadlines. So over the months of June, over the last 3 weeks, stocks S&P 500, Nasdaq have been trading sideways in a range of 2 to 3%. If we look at the S&P, this is roughly between 5,900 to 6,050, so 150 points. And the market is waiting for the next big deadline. So first thing first, we do have like the tariffs. So tariffs, that started month of April, and now the deadline 90 days later, we are starting looking at the start of July. The second deadline is obviously what happened recently between Iran and Israel, where Trump has been saying that he's still putting a bit of chance of diplomats going through the Iran problem. And that means maybe another 2 weeks without any intervention from the US. But in the meantime, market is waiting for those next catalysts. So we ended up the earnings season roughly a month ago. It's going to be starting again in a month's time, roughly around mid-July. And in between, we don't have much catalyst except obviously those two big ones. So for the time being, the market is trading sideways, as I said, 2 to 3%. But what is interesting, and this is the first picture here, I'm going to be using a lot of memes because the market, despite going, roughly flattish, there is a lot of dispersion, and we are back to the momentum trades, the option trades, the meme trades, where we have those same stories like we had in 2020, 2021. So from September 2020 to 2021, and even this week, what we saw is a lot of headlines about SPACs coming back. With Goldman Sachs, which could be entering the SPAC business again. We have all those funny guys on Twitter that are going to be pushing their names. So what it tells you is there is a lot of hot money going back into the market again, despite the market being flattish. So as always, I want to start with the week-to-date asset performance. And as you can see, if we talk about stocks, if we look at the three indexes, they are roughly flattish for the week. What is interesting is Europe has been underperforming over the last 2 to 3 weeks. So before that, Europe was really outperforming the US, as you can see on the year-to-date, where the Euro Stoxx 50 and the Stoxx 600 were 5 to 10% or more. But over the last couple of weeks, that has been a bit of a different story, where Europe is down 4 to 6%. And as you can see as well, the other indexes have been flattish. A bit of reversion for the US dollar, or should I say not the selling of the US dollar that has been occurring since the start of the year. So if you look at the year-to-date asset performance, as you can see, dollar is down versus most currency by 10%. But for the week, actually, it did okay. We had the FOMC meeting on Wednesday with an unchanged policy. We're going to be looking at it a bit after. Bitcoin down 2%, same as gold, roughly. But I'm interested now into the week-to-date industry performance. So S&P and the Nasdaq flattish for the week, as we discussed, but in between you get winners and you get the losers. So you see the dispersion. So you have a flattish market, but in between you get really sectors that are outperforming and underperforming. On the right hand side, you do have like broker dealers, you get nuclear, and what is interesting, the banks have been doing pretty well, as we're going to see for technical analysis with JP Morgan. Left hand side, anything that is regulation that could be impacted by Trump administration, like solar for the week has been underperforming. We got pharmaceuticals, we got the healthcare, biotech, really the sectors that have been under pressure over the last few days. Sectors performance here, this is the same. Healthcare, due to the Trump administration, really this is a sector that has been struggling. Overall, we are talking a flattish week. Most of the time, with the OPEX, which happened on Friday, you could have those weeks where nothing is happening. So I want to go later to explain why is it, because you're going to see that the pin that was at 6,000 had a big implication for the overall market. The rates, looking at the US 10 years, 440, we are same flattish for the week. We do have like a lot of bond supply coming next week, as always, with the end of the month. Fed's funds expectations, looking at the December where we are still expecting 2 cuts. But what is interesting from the FOMC meeting is what happened just after. On Friday, Waller, which is quite dovish and trying probably to take the job from Powell, has been pretty vocal in saying, the Fed should be cutting quickly, and that means is for the FOMC to be cutting in July. So we're going to see more and more headlines and pressure for the FOMC to be more active. The first cut is expected in October, but I'm pretty sure that if we start to see some deterioration in the macro numbers, as we have seen recently, there's going to be more and more talks for this cut from the Fed, not only the Trump, but really inside the Fed. So what about the VIX? Volatility for the 30 days, we are talking 20%. For the short-dated, 18%. We had a spike in volatility due to what is happening in the Middle East with Israel attacking Iran, and that pushed as well something that I should have mentioned in the week to date as a performance, WTI a bit higher for the week. So if you think about it, now we are trading into the $75, and that is impacting obviously VIX and the overall market. So let's go into the technical analysis, starting as always with the S&P 500. As you can see, roughly since the start of the month, we have been trading in a 152% range for the S&P. So that is true for the last 15 days. If you look at the Nasdaq, this is more or less the same. This is the ranges that we have been talking last 2 to 3 weeks. So the market is in a wait and see mode. We flagged 2 weeks ago, 3 weeks ago, that most of the time actually the market stocks are flattish neutral in the months of June, and there is a very good seasonality going into July. Russell, we discussed the possibility of the market going and spreading into the Russell. So far not happening, so this is again something to watch for the months of July. Looking at CL1, where is my CL1? Is it going to find it? Yeah, it's just after. So this is for gold. Obviously, with what is happening in the Middle East, gold is jumping higher. Now we are going into $73, $74, but as you can see, versus what happened over the last 2 to 3 years, we are back into above this 67 level. So I think there is a potential to go into the 90s if there is more tension. But for the time being, if you look at supply and demand on the oil market, market is pretty well supplied so far. As long as you don't have a shock, this is mostly noise. I want to flag another stock that is important with JP Morgan. So as I said, so here we go. We are back to almost the all-time high. Based on deregulation, we had some very positive news into the what we call the tier 1 and the ratio for the banks, where they'll be able to have less reserves and to be having more money to deploy. And as well, what happens is next Friday after the close, we're going to have the results of the stress test, the yearly stress test for the banks, where the expectations are for, as always, buybacks and dividends. But as you can see, as long as JP Morgan, which is the second derivative of the US economy, is doing so well, the market is doing pretty well. And another one that I want to flag into this momentum meme going through the roof is Circle. So Circle was a company that was IPO'd on the 4th of June at the price of $31. So what do? Those people, they do mostly stable coins. And there has been a new regulation that has been voted this week by the Trump administration and the politicians in the US. And this act is more or less saying that it's opening the market for stable coins. And as you can see, stock was IPO'd at 31, it closed at 240. So we are talking the stock up 8 times, quite something, with huge volume in the last couple of days. So the Genius Act is helping this name. But what it tells you is there is a lot of appetite these days for the stories that we had in 2020, 2021, which are, the momentum stocks these days. It's about AI, it's about crypto, it's about nuclear. So all those names that you can find in ETFs. So either you trade the ETFs if you don't want to have single name exposure, and if you want to find quickly, what are the names, you go into the ETFs, you go into Yahoo Finance, for example, and you will be finding the members. So going back into what happened for the week. So this is the week. This is starting with the S&P 500 here that we have. So we had the market that was closed on Thursday. On Wednesday, we got the FOMC meeting. We had as well the retail sales. So retail sales a bit weakish into the month of May. So I think it's more than seasonality. The US consumer, obviously looking at all the headlines of the tariffs, is a bit struggling like any consumer in the world. It's the same in the UK, for example, where the numbers were very disappointing. So this is for the hard numbers, the hard macro numbers. They are not that great, and we should be keeping an eye on it. But looking back into the S&P, as you can see here, this is the 6,000 level. This is something that we flag in the Discord community and the most advanced channels, where we had a huge positions, puts and calls open interest for the expiry on Friday at 6,000. And guess what? Most of the time over the week, the market traded at 6,000. And just so if you look at the S&P 500, the options are expiring at the start of the day, meaning at the open of the on the day of the US. And this is the 6,000 we had here. This is not the future, but literally the future went like this into the 6,000 just at the close. Overall, we are 6,000 going forward, because we are always looking at what's going to happen next. We flagged again for weeks and weeks that for the end of the month, this is the 59.05 level from the JP Morgan collar. So this is the call that is 59.05. So this is a level to be looking at. So Iran, Israel, obviously doing a bit of volatility, especially between Wednesday and Friday. The OPEX, we discussed this. High beta Momo. So if you look at Circle, as we discussed, $31 on the 4th of June. But what happens is we had a flattish week, and in between, momentum stocks were up 6%. So as I said, we are back to all those funny stocks that are moving higher. But interestingly, from this chart, this is not only looking at the stock going higher, but as you can see, this is how those stocks have been pushed by more and more buying of calls. So this is almost the back to 0 day to expiry, where you'll be buying the 200 strike, then the 215, the 220, the 230, the 240, etc., etc., and that be moving the gamma higher and squeezing the stock. So this is really what is happening at the moment. This is the playbook of 2020, 2021. But as I said, looking at the macro is not that great. And this is something that we want to be looking at for the catalyst. So I flagged the US city economic surprises. And as you can see, most recently for the US, hard data have been coming lower. So for the macro, you do have like the soft and the hard data. Recently, soft data were kind of not great, and now there's a confirmation from the hard data. So you don't want to see that going into summer because the market at one stage will be struggling. But in the meantime, if you do have like those bad macro numbers, that means the FOMC meeting, the Fed will be more and more inclined to be cutting rates. So we do have like the Fed on Tuesday with Powell talking. We do have like tons of Fed speakers over the week. So we're going to see some dovish and some hawkish speaks. As always for this week, tons of bond supply. This is the end of the month. So we get the big one, 44 billion on Thursday and 70 billion on Wednesday. As I said as well, Friday after the close, very important number with the bank stress in the US. Normally it should pass pretty easily. We do have like some earnings. You do have like FedEx on Tuesday. You do have like Micron on Wednesday, Nike as well. Some names that are interesting, not only for the semiconductors, but, understanding about the tariffs. And finally, as always, the macro. So flash PMIs on Monday. We do have like the PCE at the end of the week. And why I'm looking at the PCE, because, it obviously decides for the Fed, what is the where are the Fed funds targets? And as you can see, most recently, there's been a bit of a divergence. And this is why Trump is saying, we should be cutting the rates by 2.5%. Because, if you do have like inflation at 2%, 2.5%, and your Fed fund targets are 4.5%, he's saying, you should lower them by 2%. So let's see how the PCE will be. CPI was clearly dovish for the Fed. So on Friday, important number. Same with the University of Michigan. So flash PMIs, we do have like the tariffs deadline. What is interesting is we do have like a lot of noise coming into the Middle East, and Trump saying every single day he might or might not going for the war. But in the meantime, we put all the tariff discussion under the mattress, where 2 weeks ago, the Trump administration was saying, we're going to have a deal very, very soon. So it seems to be like Europe is going to say, okay, I'm going to be swallowing those 10%. But still, if there is no deal announced quite quickly, I think the market will start to go and doubt about all those tariffs. So Powell and bond supply. And finally, what about the weekly moves that is expected? So we look at the S&P through the weekly straddle, meaning the straddle, looking at the call and put with a strike, with the same strike, the strike that was equivalent for the close, and that gives you a plus minus 1.8% move for the week. So a lot of things for this week, and as well, it's almost the end of the month and the end of the quarter, because this June will be in 10 days time on Monday. So this is it for me for this week. Any questions? If you want to join the community, if you get questions on the 4x4 mentoring, you should really book, because we had a lot of people joining the mentoring most recently. So don't wait for the end of summer, because for me, I need to have some visibility for the booking of the mentoring. Any questions, you send me an email at greg@duponttrading.com. Have a good trading week. Bye bye.